What's up, guys? Wanted to do a short video for you. There's a lot happening in the market, man, and I wanted to kind of reach out to you because as you watch what's happening, and I talked about it when I was at my office, so I did a short video on there. You have everything that's going on as it relates to the oil prices, the stock market. As a matter of fact, I just saw something that said the S&Ps post the third straight losing day as traders eye Middle East tension. So that's happening, as well as yesterday or the day before, sometime this week, I think it was the other day, maybe yesterday, before yesterday, the Feds did not lower their interest rates, which everyone already kind of knew that they weren't going to lower it, but it still bodes a problem, right? Because now Trump's like, what are they doing? Everyone's like, what are they doing? It's interesting as it relates to where you are, as it relates to investing your money. Let's say you're a high paid professional. Let's say you're a doctor or a chiropractor or a dentist or, whatever. Like this affects you and your money. Most of the time, you guys, and as a matter of fact, they're talking about this now, Fed rate decision based on basis points, all these pauses. I'm getting back to the whole money thing, right? The 10-year treasury is 4.4. Like your money is if you're in the stock market, your money, or you're in maybe your retirement, 401k IRA, whatever your 401k IRA retirement plan is, that money is tied to that. So you are going to have your influxes. And with inflation happening with the dollar, the interest rates staying high, the jobs report actually came in pretty good. So that's up. But that means more people are working because they need more money. And if you're constantly putting your money in a place where there's massive influx all the time and you can't control that while you are working to make more money and the cost of goods are going up because of inflation and the debt in this country is also going up like crazy, you have to have something going on within your investment opportunity that is going to move you past all of this chaos that's going on in the marketplace. You can't keep up with that and run your practice, keep up with employees, keep up with new clients coming in the door, constantly marketing, getting other people to come in to be able to support your business so you can actually continue to take care of you and your family long term to eventually retire. So that's why I wanted to come and talk to you guys about this because when I talk about building wealth through real estate investments, I really mean it, right? So the thing that I wanted to kind of share with you guys was I understand that you already understand the money process. Like there's only a couple of ways to create wealth, right? Well, there's three if I simplify them. So you're going to have a business or an activity, your job, whether you work, like I said, you're a doctor, you're a dentist, you're a chiropractor, you're a professional, you're an entrepreneur, business owner, whatever, right? You already have mastered the go get money game. You already know how to make money. We're taught as kids to make money. Like you can cut the grass, wash the car, clean your room, whatever it is you do for money, right? So once you have that part mastered, the next part is to be able to keep money, store money, but the biggest piece is to not lose it. That involves the IRS and to be able to actually keep more of what you make, right? Because your tax, I made a video on this the other day and I posted it in like someone asked me about it. But the biggest expense for you as either a high earner, I call you guys high revers, high revenue earners, right? Instead of high net worth. So, because the fact is, and there's a statistic about that, that 95% of doctors earn a high income, but only 5% have a high net worth. So that's a huge. But I'm bringing that up to you because I'm talking to doctors a lot lately. But your biggest expense in your business, your practice, your income is going to be your taxes. So let's say you are a heavy hitter. You make a lot of money. You're probably going to get hit with anywhere from 27, 37, and depending on what state you live in, 50 to 55% in just taxes. So you're working half of the year to just pay the IRS. I don't believe you should have to pay the IRS anything. You're already paying property taxes, you're paying taxes on goods. If you save money and you make any money in your IRA, 401k, any earns that you get from any investments also come back to you as ordinary income or earned income, which you're taxed there. If I give you a dollar, that dollar is already taxed at 40 cents on it because I paid my taxes. You're going to have to pay taxes on that same dollar. It's a scam. It really is. This isn't about not paying taxes or escaping taxes or avoiding taxes. This is about paying the amount that you deserve to pay or you have earned the right to pay and no more, no less, which should be zero, right? If you have the right investments. So, like I said, number one thing, you already figured out how to get money, earn money, deliver a service or a product or consulting or whatever it is you do for your customers and clients. Next, most people have gotten really good but not mastered it at actually keeping more of what you make. That goes in making the right investments in something that you get to pass through tax benefits of those things. All of those things are happening, right? That's important to know. So if you get trapped into how do I create wealth, especially using real estate, first you got to get money, got to get that in the door. Next, you got to learn how to keep money, right? Meaning, like, how do you do that with the tax part? And then last but not least, you want to take what you have left that you've kept and put it in an investment that actually multiplies the money without you constantly pushing on it. All right. So those are the big things I like to talk about to people because a lot of people know this already, or I feel like they know this already. It isn't what you know, it's what you do. It's what you execute on. Because a lot of people be like, dude, I know that already. But then when I ask them, like, how much money do you have in your savings account or your IRA? Oh, I have 300,000, 200,000, 600,000, 80 grand, 70 grand. But they don't realize like that money's just sitting, going away, or like they're not really earning anything. And they're like, well, I don't have the time. I leave it to my financial advisor. I leave it to my financial planner. I leave it to my asset protection. I leave it to this guy. Like they aren't really paying attention to your stuff that way because no matter what they put you in, they're going to put you in another Wall Street product. Retirement plans are Wall Street products. They take your money, they invest it in mutual funds, which is a Wall Street product and or service. Period. That is what it is. If your money is not in cash, if it's sitting in the bank, it's actually still in a Wall Street product because the bank takes your money, has the wherewithal to take any dollar you put in and lend that money out 9 times. That's the process of that. So no matter what you're doing, your money is still locked in there unless you're going to move it into a piece of real estate. And I'm not talking about a mom and pop single family house. Your single family house is not an asset, even though, because again, your single family house is typically tied to a mortgage, which is another what? Wall Street product, right? That's what banks' Wall Street products are. They take that up, they bundle it, they sell it on the open market in Wall Street or whatever it is that they do. And that's how that works. And when I say whatever it is they do, it isn't that I don't know, but I'm shortening this process so we have this conversation. But all of this really spikes when I see this stuff. I'm like, look, the feds aren't lowering rates. That means think about that. If they lowered rates, people would run to the bank and get loans, right? Because it would make the cost of money cheaper, which means there would be more debt. That person will go off and buy more stuff. And then once they buy more stuff, what happens to the cost of goods? Supply and demand, just basic supply and demand, the cost of goods is going to also shoot up. So as it relates to them just trying to get inflation on the dollar down to like 3% or 2.6 or whatever it is, they know once they lower interest rates, that 2.6 or whatever is going to continue to rise because it's cyclical. It's a cycle. Big fancy word. But I bring that up to say if you're creating wealth through real estate, then you already know that. You're like, look, I need to go get money in the door. I need to keep more of what I made by investing that money or putting that money in a tax benefited or a tax advantage investment. And then that money that I invested needs to continue to do a couple of things. One, it needs to protect my capital. It needs to be an inflationary hedge and it needs to be in a real asset, not a paper asset, not a stock, not a bond, not something that's going to influx and go up and down, right? That's number one. It needs to protect my capital. Number two, it needs to provide passive income for me. I can't keep showing up running my practice or doing my job or going to work every day or running my business and then still have to turn around and manage my investments. That's not passive, right? It needs to be a passive investment. That's the second thing, right? It needs to provide that cash flow per month for you, right? To continue to grow while you continue to focus on your business, your practice, your job, or your work. Next, it also needs to provide controlled appreciation. When I say controlled appreciation, you need to have some level of predictability. You need to know, hey, if things go well, the value of my investment will continue to go up with inflation, with income increases. When we're talking about multifamily, institutional quality real estate, that's the thing you want to look for. We already know we can take a look at an institutional quality asset, commercial multifamily real estate, and kind of pinpoint where the value of this property is going to be, especially if we're not going to sell it. We know our valuation, which means our asset or our investment continues to go up as well. And then we also want to have an investment that kicks off tax advantages on its own. So I talked about to be able to keep more money, keep more of what you make. So after you've earned your money, you want to be in a taxed advantage opportunity, and that's the real estate I'm talking about. While it does these other things, so now, like I said, you get the depreciation, you get the partnership, you get the write-offs, you get all the benefits of being a partner in an investment while you are still managing and running your practice and all the other things that you are doing and managing your life, really, right? And there's some other things too. I've talked about it. It also gives you leverage. You want to put a dollar in an investment, and with leverage, that dollar is now worth $3 in a good investment, right? That's how real estate works. You put a dollar in, that dollar now becomes worth $3 because you have good leverage in that deal. if you're doing the deals right. And then there's other ones. You got scale, you have other market opportunities, you got a hedge from inflation because it's a real asset, not a paper asset. Real assets tend to go up in inflationary periods. So for us as real estate investors, we want inflation, right? We're not running from inflation. We just don't want to hit it. Inflation only bothers people who don't have income and or investments coming in. You make more money. It doesn't matter whether the cost of goods went up. You just know that you got to go make more money. It actually is a benefit to you as well. And if you have money parked in a place where inflation gives your investment a lift, that's also a benefit to you. But that matters in real assets more than anything else that we can play that game. All right. So I wanted to share this with you because I'm watching this happen and I was like, dude, there's a lot happening in the world. Right. So I wanted to jump online and talk to you guys and share with you guys my thoughts on it. Like, look, interest rates are going to do what interest rates do. You should be able to take a look at an investment and go, look, that's a good investment for me while I'm running my practice. If you're a doctor or a chiropractor or a high paid professional, while you're running your firm, whatever it is that you're doing. And then you should be able to say, okay, look, we have this amount of money coming in. We're going to make sure we have that money, keep more of what we make by taking that money and putting it in something that gives us the tax advantages so we don't have to continue to lose money to the IRS as they continue to play these dumb games that they play, taxing the people that make the most and contribute the most money, right? And then last but not least, the money that I have been able to shelter, I need to move that money over into an investment that continues to work hard for me so I don't have to continue to work hard for it and I can focus on growing my business, my practice, whatever that is. So later when I'm looking to exit that business for whatever you're going to exit it for, because you can continue to grow your revenue from your company, right? Now your investment is still growing. So when you exit your company, your investment is still there, right? Giving you, again, protecting your capital, cash flow, appreciation, the tax benefits, all to the benefit of you while you create wealth for you and your family. Like that's how this game should be played. Because then this matters, but it doesn't matter as much. Then this is just a decision what game you want to play. And I'm telling you guys, if you play the game of the wealthy, the top 1% play this game the exact way that I'm talking to you. They focus on getting money, getting money. There's no shortage of money out there. You can build your practice, grow your profession, all of those things, right? Your business, your entrepreneurship, whatever, your revenue, your income. That there's no shortage of money on the planet. Money comes from people. So you just need to focus on more people. Next, you need to focus on keeping it, right? Putting it in a place where you get to keep more of it because you have the tax, you've benefited from putting it in a place where it protects you from the tax. And last but not least, you want to multiply that money. So those are the focuses because then this matters less. Just put your attention on the wealth decision, making a commitment to being wealthy, and then doing the things that we're talking about. So we're here to help you. That's why I created Bell Capital, so I can help more doctors, more chiropractors, more dentists, more professionals, more entrepreneurs, business owners, hardworking people like you, where Wall Street is not protecting you guys. The bank is not protecting you guys. They're only doing what they're doing. This right here affects you, but it's less and less and less affecting the other people. So Bell Capital was set up so I can go out, we can find the deals, fund the deals, manage the deals, send you cash flow every month, and you're a partner so you get the tax benefits that we get to share in rather than me going to Wall Street and big banks and institutions to partner with them. They don't need this. The everyday investor, the everyday person like you, the regular hard-working person needs these investments. And we're going to be looking at, or we are looking to purchase the same assets that Wall Street companies and institutions and big banks invest in and buy for their wealthy friends. That's what we are doing. That's why I set this up. So, if you need our help, if you want to find out how to work with us or you have questions about working with us at all, go to bell-capital.com. That's bell-capital.com. You can take a look at what we're working on, the fund that we have currently open. You can ask questions. You can schedule a call with one of us, and we will answer whatever questions that you have. We're here for you. We want to talk to you. We're not some spreadsheet company. We're entrepreneurs just like you. I'm here to build something big, and I want to do it with you, the everyday person, the people that I care about. You're my people. Trust me. I love it. I'm not built for the institutions. I'm not built for those guys. And together, if we all show up and put all of our money together and we go buy a big portfolio, which is what I want to do, then we go to them. Then we can score one against Wall Street because that's the game, right? So, like I said, let me know if you need anything. Leave me a comment, like this video, share this video, comment on this video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time, man. I need you both. I do. I want to hear from you, though. Leave it in the comments. So, what did you take from this? Where are you at? Where are you stuck at on this thing about the decision about building wealth? Wealth is a decision first. You can have a bunch of money, but if you never invest, you'll never get wealthy. You can have a bunch of investments, but you haven't made the decision to be wealthy. You'll just live day to day. You'll just be content with just taking care and paying the bills. You have to make a decision to be wealthy. What's your number? Leave it in the comments. Like, where are you stuck at on here, or what are you focused on right now? Are you in the get money phase, or are you in the save it and keep it phase? You're still trying to figure out, like, hey, how do I get more tax benefits, more tax advantages? Like, what am I looking at right now based on how much money I make and how much money I have to fork over to the IRS, which sucks, right? Or are you in the multiply phase where you're like, look, I got that other piece handled, man. I'm looking for investments and I want to look at some investments. I want the right investments and I want to talk to you. Like, which one are you at out of those three? Get it, keep it, or multiply it? Which one? But I'm here for you either way. Like I said, let us know how we can help. We're here for you. Let us know if you have any questions. Leave them in the comments. And let's get after it today. Boom. Are you an accredited investor with 300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with 300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.